All right, hey there. Good morning, everybody. It's just a few minutes after 11 a.m. Central Standard Time here on Wednesday, the 30th of December 2020, San Antonio, Texas. Hopefully, you guys are doing well here. Man, almost made it to the end of 2020. What a ride it's been, right? Sadly, I'm not too sure 2021 is going to be any better. Um, again, you guys have been following me for a while. You know what my general thesis is. Um, but, for those of you that don't understand, that doesn't mean I'm not open to something different happening. But it's going to have to show itself. I mean, right now, every indicator out there, every indication is that everything is so far offsides for risk on right now. And generally, when markets get like that, you get strong reversals the other way. So whether again, we talk about the three most crowded trades right now. First is long technology stocks. Two, the second most crowded trade is short the U.S. dollar. And the third most crowded trade right now, guys, is bullish Bitcoin, long Bitcoin. Generally, markets work the way they work, guys. When you get too far offside, you're rarely ever rewarded in the markets. Matter of fact, you're usually punished. The thought basically is that if everybody is one way, who's left to continue going that way? And so it's prime for a strong reversal, which then just starts liquidating and causing everybody to cover, which then, adds to the strength of movement in the other direction. So I think if you are right now emotionally in any direction, I think, again, it's never a good thing. So we'll talk about that a little bit. We'll see how 2021 turns out, guys. I'll tell you what, if it ends up being the beginning of some kind of bullish new push, across all the markets, I mean, I don't know of any other time in history where we've done that, where we've started bullishly, where we've started a new bull trend on such excessive euphoria. I mean, this is, again, the way that people act, the sentiment, the degree to which people are so far offsides toward risk-on products. I mean, it just screams top, market top, not market bottom. That isn't how bull markets usually start out. So, it's just there to keep you guys in check, man. Again, if you are emotionally bullish because you're following what some Yahoo online says without considering what's really going on, you kind of set yourself up to get really hurt there. So hopefully you guys aren't doing that. Anyway, I'm here to try and help keep you a little bit sane with all that. Let's see, who's here already this morning? Hank, first one in. Look at Hank jumping in there. What's up, man? Amber Lee, Merry Christmas and Happy New Year to you, my friend. Hopefully things are going well for y'all. Let's see here. Is that Joseph there in Chicago? What's going on, man? Data checking in. Crypto Mowgli checking in there. Says good early evening from a bloody cold England. We're not exactly there, but we're overcast. We're going to have some severe weather probably here in the San Antonio area today. It's crazy. Just a few hours north of us, in my hometown in San Angelo, they're expecting something like potentially 6 or more inches of snow. It's absolutely maddening. It's crazy that they're looking at that, which means we're on the edge of that high pressure system coming down, which means we're probably going to get just a ridiculous amount of potentially severe weather here, hail and stuff like that maybe. So we'll see. We'll see. Hey there, let's see, your data's here as well. It says be impatient with losing positions. But be impatient with losing positions. I hear you there. Let's see here. What's going on here? Deep Quantum Crypto says another great day alive. Yeah, I agree, man. Any day you wake up, guys, listen, here's the thing. No matter what your situation, any day that you wake up means that you have another day to potentially better that situation. Your alternative is not to wake up, guys. And if you don't wake up, you've lost. It's the end. You're done. So I think no matter how you feel maybe about what's going on in your life at the moment, just remember the very fact that you woke up means you have another day to change that. You have another day to make your life better, another day to take another step in the direction that you want to go. You are wholly in control of your lives, guys. You are not victims. You are in control. You can determine where your life goes, but you have to believe you can. As they often say, whether you believe you can or you can't, you're right. So Think positively, work positively, guys. Work hard. Do the things you've got to do to put your lives where you want them to be. Nobody else is going to do it for you, guys. Hey there, Onyx King. Good to see you. Tellurider's here as well. Let's see here. Wind Beneath Wings. What's going on, man? Let's see here. If you're holding, Tellurider says, if you're holding on to stinker positions, consider dumping them for mental peace and tax loss harvesting. Yeah, again, guys, if you're in the U.S. here, we're coming up at the end of the year. So if you're looking to harvest some tax losses, you might want to do that before the end of the year there, for sure. Tellurider, you can't imagine how well the average Texan drives in the snow. It's not even that. It's that the cities aren't prepared for this because they get it so rarely. When I was up in law school just a few years back in Lubbock, maybe 2016, maybe I think it was. Maybe it was 2017. Anyway, the snow came down so rough, and they only had one. I believe they only had one salting truck or whatever, and that was nowhere near enough. And it was awful. I mean, we were basically locked inside for 3 or 4 days. It was crazy. And then the next year they bought multiples more, and then of course no snow then. But they should be getting hit right now. So crazy times, yeah. Hey there, Garvin. Good to see you, buddy. Let's make it a great 2021 because I've had it with this COVID stuff. I hear you. Speaking of which, have you guys heard that new mutated strain of COVID has been found in the U.S. now? They just got it in Canada. They just noted it was in Canada here a day or two ago. And then just recently here within the last, I think, 24 hours or so, Colorado found a case of it. So, and what's the idea? I think the idea is that the vaccine doesn't work with that mutated form, right? I say all this not to scare you from a personal level, but I say all this because what's potentially, what does that mean as far as governments go? Because governments are going to decide, whether they lock you down or whatever else they're going to do, which then has an effect on business. And let's face it, our mental health. So, if you look at it that way, you have to keep up with what's going on with COVID, whether you believe that it's a thing or not, or it's a big deal or not. The fact is government's going to treat it like it is. And of course we're already hearing about some people having allergic reactions to the COVID shot, the COVID vaccine. But of course, some people have allergic reactions to the flu vaccine, the flu shot every year as well. So I don't think that that's necessarily such a huge deal, unless it becomes a wide-scale allergic reaction of some sort. Unless a significant number of people do it. Otherwise, it's, as far as that goes, it's just like the flu shot. Some people have allergic reactions to it, so we do have that to watch out there. Let me see here. Let me see what's going on here. Government saw the RSI dropping below 70. Hank says the vaccine does work against the mutated strain. The last thing I saw was that it didn't. So I'll have to check on that again. I haven't had a chance to check on it today. But nonetheless, there it is again. So we'll see what's going on. Again, looking at how government responds is the big issue there. Not so much what it means, I think, health-wise for people. At least with what we do here, looking at the charts. So, by the way, guys, join us at howtotradetowin.com. We'd love to have you there. We do have a code, Welcome 2021, right there. I typed it in there. If you go in here and you go to join us and you click on whatever you want, and you type in that code on your checkout page, it'll give you a 25% discount off any package we have, guys. So if you want to get a yearly package, which is already significantly discounted from the monthly, you're going to get an extra 25% off that. So it could take your price quite low, 6-month, yearly, stuff like that as well. But again, it works on the monthly as well. So jump in there, do it. Limited time. We'll see how this goes with it. Let's see. Again, we'd love to have you there. By the way, Tier 3 members, today, don't forget, we'll have our live educational stuff at 4 p.m. Central Standard Time. That's in about just under 5 hours from now. So we'll do that. And then we've got to make up for last week because we missed last week with the Christmas holiday there. And we'll do the makeup tomorrow, probably around noon my time. So probably just about 25 hours, 24 and a half hours from now, we'll have that makeup. By the way, for everybody else, TWC offices will be closed tomorrow early, half day. So after I do that live stream with Tier 3, that'll be it for the day. And then we'll be closed through the weekend for New Year's. And then we'll be back up and running like normal next Monday. So today we're going to kind of take a look at a little bit more than Bitcoin, guys. We're going to look at the, DXY, stock market, stuff like that, like we might normally do on a Friday, to kind of give you some overall market looks, I guess you could say. So anyway, join us, guys. We'd love to have you there. Let's see here. Gerben says, well, I read the list of side effects and illnesses of the COVID shot. Phew. Even the FDA is not too sure on that, but they go ahead now. Yeah. Yeah, again, this... Oh, by the way, guys, remember, here in the U.S., if you didn't know, the program, the law under which the FDA okayed the emergency release of this vaccine means that basically if anything negative happens to you as a result of the vaccine, you have no recourse, basically. You cannot sue the manufacturer. You cannot sue the government. Now, the government has a special program that they can, give you a little bit of money if something bad happens, in situations like that. But you're likely not to be able to get that either. So I don't know, man. When stuff like that happens, I don't know that I would be so tempted to jump in and get a shot. With no legal recourse as far as what could happen with that because they rushed it out. Not enough testing, per usual FDA standards and all that. So I don't know. I mean, maybe we'll be all right. Maybe. I don't know. Stop spreading anti-vax rhetoric. Hank, I'm not spreading anti-vax anything. I'm telling you what the law here is in the U.S. You say millions have already been vaccinated. That's fine. So what? I'm just saying me personally. Hank, Hank, you have trouble listening to what I'm saying, man. Listen to me personally. I'm saying me personally. I would not take it just because if I don't have some kind of legal recourse against something that may happen as a result of that, I'm not too excited to take it. But that's me. I didn't say y'all shouldn't do it. I'm just talking about me. You got to listen to what I'm saying, man. There's no anti-vax rhetoric here. This is my personal opinion as far as taking something where I have no legal recourse if something negative happens to me because of it. And that, and that part of that, guys, is me. Part of that is a law degree. Lawyers, man, and people with law degrees, we're tough, man. We're tough when it comes to, non-recourse stuff. So, do it for what you guys need to do. I'm not saying it's not going to work. I'm not saying you're going to get something like I already said. I'm not saying that. But I'm saying for me personally, my thing, for the way I live, I'm not too happy about that. So, but I think if you're trying to make a decision as to whether you should take it or not, I think you have to have that full picture in your head. I think you have to have full information. Just imagine you go and you take it thinking that, and then something happens and you think, oh my gosh, well, now I can sue the company for it. And then you find out you can't. Well, maybe you might not have taken it if you knew you couldn't do that, if you had no recourse against it. So, again, no anti-vax rhetoric here, guys. Pay attention to what I say. And again, the morbidity rate of the vaccine of COVID is so low anyway. I mean, if you get it, if you're susceptible to COVID, then COVID becomes very dangerous to you. If you're, especially if you're older or you have some chronic health problems, something significant health problems, something like that. COVID could be very, very dangerous for you. For most people, it's not though. For most people, it's not a big deal. So, you guys just have to decide what you want to do based on your life and what you've got going on. But again, for me, overall, the big thing becomes what does government do in response to COVID? Because that affects the markets. That affects the sentiment of the market participants. So that's what's important there. Let me see here. Let's see here. All right. Anyway, so there we go. Tao, good to see you, man. Checking in here. What's going on, Trader EFE? Good to see you checking in as well. Um, Amber Lee, man, always with the funny comments there, man, or the way that they say them anyway. Let's go ahead and jump in here, guys. So what we were looking at in Discord, what we've been watching is this movement here. And so as of last night, we looked at a possible A, potential triangle with B, and then a C down, just to finish leg A, looking at a bigger correction here. But I told them, again, if that triangle was invalidated with the move up, then we could potentially be looking at a flat correction. And this right now is where we're at. Potential flat correction. So we've got ABC down for A, ABC up for B. B is terminated above where wave A started, so it makes it likely a flat correction, expanded flat. And so that would give us a wave C down here, a minimum wave C down here at around 25,737, just below wave A. But if it is an expanded flat, it's rare for the for wave C to end so close to wave A. Usually wave C comes quite a bit further. Usually it goes like, the 1618. So if we do this and we do wave B here, let's see, 1618, that'll give us what? There we go. That 1618 gets us down here around 24,000. And so, even prior to that, you could probably look at the 123.6 here. Oh, look at that. That 123.6 actually hits right about the area where I was kind of looking for wave C to get to. It gets you right around this kind of demand structure here, all this cluster of activity, about 25,100 area. So, just based on if this is a 1 and a 2, well, again, you've got 1, 2, 3, 4, 5. So you've got 5 waves down. It looks like you've got an A, B, and then 1, 2, 3, 4, 5. So C. So it looks like you got 5 down, A, B, C up. So that 1, 2 would give you a minimum wave 3 target of 26,224 here. And then again, that's at minimum wave 5 of 25,737. But I think we're going to get an overextension, and it'll take us probably down here around 25,200, 25,100 at least. And if I'm looking at that, I'm thinking that's just going to be a wave A, maybe. So, again, looking at the idea, here's how we're looking at this, guys. Rather than trying to figure out exactly what the count is here, we can look at it a different way. So if you have this triangle here on an advance, going up here, this triangle would be a wave 4. It's not going to be a wave 2. So if this is wave 4, then that means this could be wave 5. And it could be like all said and done, right? Except that if this is wave 5 and we're set to reverse, to me, that would tell me we should have a stronger drop down, something like this right here, and followed, quickly again. So quick down, push up, another big quick drop down because of how price has gone so vertical. And we're not having that. So that tells me this is probably interior to a larger wave 5. So if that's the case, then this is potentially 3, 4, and 5 of maybe a wave 3. And if that's the case, then that means this right here is 4. And wave 4 usually targets the wave 4 the lesser degree. So we would generally expect if this is wave 4 playing out here that it would come down here toward this wave 4 area. And so that's how I'm kind of playing it at the moment here. Now, obviously, if price continues up above today's swing high here from overnight swing high, it creates a new all-time high, that tells me that this is probably maybe like instead of a 1, 2, 3, 4, 5 here, it's a 1, 2, 3, 4, and then working on 1, 2, 3, 4, 5 to finish this larger 3 up higher. But in that case, we would still then be looking at it to come on down here for the wave 4. Still toward this 23,100 at least kind of area, potentially 22,000. It could drop further than that, but at least to that area. Again, that takes this larger wave 4 correction to the wave 4 of the lesser degree of the way, your wave 4 of 3 area. So that's what I'm kind of looking at right now. Let's see here. Is it going to drop down? Well, what I would look for, a decline through this ascending channel support would probably be the first clue that the top may be in. Continued drop here below the swing low here at 27,311 and 73 cents on Coinbase would add confidence to that idea. Again, the idea being that maybe you got a 1, 2, and then you're working on a 3 then. So that's what I would look for. Let me see here. If we get above this 25,000 or 28,580 kind of area here, my next set of targets are what? 28,771, 29,122, 29,463, 30,000 because it's a round number, a tens number, and then 31,000. Why the 31,000? The 31,000 because this trading range right here is a pattern. And so if we break out of that pattern, that gives you a pattern target based on the height of that pattern right there around 31,000. If we have the breakdown below, like I'm expecting at the moment, then based on the height of the channel, your target is actually 23,164. So it's right there around that 23,100 area. So that would be, that further downside target there at least. So I think that's just kind of the easy way to do it. Now, if we're breaking down through this support here, the initial target's going to be 27, what is this here? 27,566 is what we'd be looking at. So basically we're looking at this kind of area here. And then below that, we're looking at 26,241. And then we're looking at 25,759. And then, of course, that gets you, of course, getting you down here toward below that, this trading range here. So that would be the immediate how I'd look at it for the downside there. But really, again, if we're breaking down below this below this range here impulsively and continuing, we should look potentially around that 23,100 kind of area at least. But like I said, I think this right here is maybe wave A. And so then we'll have wave B. Once we get it, we'll have wave B up, which will probably get hit right here at the high volume node around 26,770. And then we'd have wave C down. So again, you have an A, a B, and a C to potentially finish wave 4. But I think overall, I don't think this is the top. I think we've still got one more push up there to finish with it. So we'll see how it continues to play out here. Now, if there's all of a sudden just a whole bunch of supply and it just continues to just tank on us, well, that might set up a whole new idea. But I do think, again, guys, if we're at the end of a movement up, if we get to an end of the movement up, because of how straight, this is the daily, guys. Look at how straight we're going here. So a reversal, when we finally hit the top of that move, should be a strong move back down. It shouldn't just be a strong move the first time. It should be a strong move first, get a bit of a breather, and then another strong move down to kind of follow it down there as more supply gets dumped in on that small bounce. So until we're kind of seeing that, again, bias should continue to be to the upside. Notice that the stop overnight hit the R3 pivot here on the daily. So you do have that. As far as the daily goes, we've got bearish divergence still, building from the 21st of November. As you can see it right here. We've got Stochh RSI almost topped out and overbought there. One thing that you can look at here, let me kind of get rid of all this here. Another way for you to potentially look at this if you're not comfortable the other way there that I showed you. Let me get rid of all these. Almost. Let's see here. Yeah. I'd probably watch this ascending support line here. I think a breakdown of that support line says, hey, we're probably headed for a decent bit of correction. So again, basically you're looking for a move down through the bottom end of the, of this trading range right here that we're at. In doing that, again, our initial target is this kind of this 23, 22 area here. And it could get that, but that may just be a bounce as it hits further till it gets down here around, the low 19s or the higher upper 18s. We may actually come down that far before potentially heading up. But I think if we end up losing this area here, if we're losing this, this 17,000 or so down here toward the bottom of this, I think that kind of tells you, hey, listen, we're definitely doing that much bigger correction. And you say, well, of course, because we're at that point $11,000 lower than where we were at the top there. Yeah, but I think it becomes a bigger correction at that point. I think, then you're looking down here toward 10,000 or maybe, less, or maybe more further down. If we're losing this 17,000 area right here. So, but until we get a strong reversal coming off that, I think, again, overall bias should continue to be up as we do. 4 hour, we've still got this building bearish divergence from back here on the 17th of December. Stochc RSI has crossed bearishly. Let's see here. 1 hour. 1 hour again has its own bearish divergence. 27th of December until early this morning, and then we had the drop down. But again, price is kind of trying to push its way up right now, but we'll see if it remains down here. Right now, it's finding resistance at this previous support level right here. Stochc RSI does have room to go up, but it never really actually dipped too far and oversold, like just barely dipped into it and pushed back out. So we could just be seeing something similar to what we saw back over here a couple of days ago, where you get the push up in there and then it pushes down further to get more into that oversold area. There's a lot of room for RSI to drop as well on that. So don't assume that just because you're getting this bounce out of the top of the Stochc RSI here, that that means you've got all this upside. It could potentially happen, but you don't want to think it necessarily has to. Let me see here. Again, this count is valid until price advances above the swing high here, which is 28,580 here on Coinbase. If it gets above that, then we look at maybe something different. Again, potentially, I don't know. I mean, I guess we could potentially still have an expanded flat here just as a 1, 2, 3, 4, and then you'll get a 5 just a bit higher around 29,000. But again, it could be a 3 and a 4 here, and then a 1, 2, and then 1, 2, 3, 4, 5 gives you 3, 4, and then you'll have 5 up higher. Again, then you start looking at that $30,000 and $31,000 targets there on that. Let me see here. Let me see. Let me kind of catch up with you guys there. Let me see where you all at. Budman, what's going on? He said, I thought CDC had given out this China virus data. Well, some people thought that the United States have most eradicated most of the disease known to mankind by 2020. Yeah. We'll see. I mean, I don't know. I mean, if I look at everything, I can't... I don't know. It seems to me that it came from, that area. It's man-made, which, I think I have hope for really bad things to the people who created it, because it does hurt a lot of people. But, again, as long as everybody continues to, I don't know, to want governments and whatnot, you're going to have these kind of things that are continue to happen. You guys just got to protect yourselves. That's all I can say about that. Let me see here. Hey there, Clarkman. Good to see you. Can you have a look at DOT today? Oh, I don't see Chainlink coming down similar to XRP right now. No. Not at all. Right now, it's just a pullback. So I know there's a lot of, again, armchair economists and whatnot in crypto Twitter, spreading whatever they want to spread, but I don't see any reason. Right? As a matter of fact, guys, I want to be honest with you. I don't think the XRP thing is such a big deal as everybody makes it out to be. This XRP's been around for so long, and so many people are, are using it in such a big way that it seems most likely to me that Ripple will get a fine, and that's it. And maybe some, future, maybe something about future, about how people can get involved in XRP in the future, some regulation on that. But I mean, I don't see it as something that right now was going to take down the company. What I see the bigger problem for XRP right now is the delistings by the exchanges. I think that's the real potential. I say nail in the coffin. I hate to use that term, but at least it may keep XRP down to never be able to rise like it did previously, potentially. But then again, if it doesn't, then the people who buy at the lows are going to be insanely wealthy probably when it's all said and done. So I'm considering, purchasing a bit of XRP again, just in case of something like that. So we'll see how that works out. But I honestly don't think that the whole XRP thing is gonna end as poorly for Ripple as people seem to believe. Just knowing the way the government works generally and how long it's been around and how widely used it is. Whether people having it or companies actually using it or whatever. I mean, it's significant around the world as far as in other people's hands. And so if the SEC were to do something to ruin that, they'd be hurting a lot of people. And the SEC doesn't normally try to do that. So we'll see what happens here. Let me see here. What's going on, TV Canal? I see you checking in. LXT as well. Let me see here. Again, 33,000, as we've talked about before, is the weekly R5 pivot. So not a terrible potential target there. It's one we're still watching. Let me see here. Good morning, Crypto Girl. Good to see you. Let's see. What does he say? The Magic Lord Bitcoin, waiting for 1,000 for Bitcoin. Yeah, we'll see. We'll see. Again, once it starts getting to that $30,000 to $33,000 range, once it gets above that, I think it really starts looking less and less likely. A lot less likely. Not just a little bit, but a lot less likely. You can't completely invalidate it though. That's the problem. There is no at this specific extension. We can't have the expanded flat anymore. It's going to be more along the lines of how does that count look coming up from, what would B wave be? How does that count look? Or wave C of B? I think that would be the bigger thing there. But either way, we're going to come up for a correction here. People don't believe it, but markets don't go up forever, guys. You got to keep that in mind. Let me see here. Hey, Block Tech, what's going on, man? Good to see you. Let's see. Darren, what's up, man? Yeah, regular toaster. I know you, buddy. I appreciate you, man. Thank you so much. No, I didn't open no short yet. No, there's no reason to open a short yet on any longer term held positions. I don't think anyway. If you're in from 16,000 or something, I mean, you can lock in profits right now, and that's fine. That's great. You've got a good bit of profit at this point, $12,000 or something. But for right now, I think we've got further up. So for me personally, I'm willing to allow it to pull back before heading, to see if we can get that push up higher. Now, if you think it's going to come down, like I think it's going to come down here, maybe $4,000 or something, maybe you want to close out a position. The problem, you guys got to understand though, the problem with trying to play every move, in an Elliott Wave sequence, is that you never know right away if that count is correct. If things are going to happen where you are. Like, we don't know right now if this is, playing out as I think it may. Again, I've given you a situation where it could go up higher toward 30 or 31,000 before, coming back for a wave 4. So yeah, if we're looking at that, things become a bit more interesting. And it's not that it would be a bad thing to close in profit, especially if you're, from 10 or 12 or 16 or something, to lock in that profit and secure it. Because, we're getting into this territory where we really don't know what's going to happen or when it's going to happen. So you can't go wrong for doing that. Though, of course, you'll kick yourself and you'll be all upset at yourself if you close it now at 28 and it goes up to 30 or 32. I don't know. The way I see it, if you're in from 16 and you're closing at 28, that's $12,000 of movement of profit there. I'm happy to lock that in myself personally and potentially look for a shorter term long opportunity, a breakout above this swing high here and go long there for a bit up. Remember, guys, to be successful as a trader, it's not holding until the very top and selling there or buying at the very bottom. It's the ability to lock in your profits consistently. That and risk management, proper risk management. Those two things are the cornerstones to being a successful trader. If you can't do those two things, you're not going to be a trader. And again, I don't consider you a trader if you're coming in and for years, you're not successful over years. Instead, you're just continuing to drop money into the machine, into the game here. I don't consider you to be a trader. I consider you to be a gambler. You're not learning. You're not making consistently better trades. You're not consistently profitable. You haven't taken hold of what it really means to be a successful trader. Instead, you're still hanging on those retail ideas of selling the absolute top and buying the absolute bottom. Meanwhile, the real traders out there, the ones who are consistent, are able to stay in for a long period of time, 5, 10, 20, 50 years, they're grabbing movements along the way, guys. They're getting in after some confirmation. They're getting a good target. They're getting out. If price goes up higher, it goes up higher. It is what it is. They've already locked in their profit. They look for their next trade. They consistently lock in profits. Retail traders, unfortunately, tend to hold because they always think price is going to, they get emotional. They always think price is going to continue moving in that direction. And then it doesn't anymore. And then psychologically, mentally, they kick themselves thinking they lost all this potential profit. But because they never locked it in, they didn't have it to begin with. It was only potential profit. But yet people are so much worried about that little bit that they might have been able to have captured there rather than, being excited about how much they do have to lock in still. And so then they don't lock in. So then it continues dropping and they continue not. And then they feel worse and worse and it gets harder and harder to close your position because you feel like you're losing more and more even though you're still up. I keep telling you guys, the number one thing, the most difficult part of being a trader is yourself, dealing with yourself, your own emotional state. That's the most difficult thing. Day in and day out, guys. Let me see here. TV Canal says, when I see the weekly RSI at 93 plus, I really want to open the short. Yeah. But again, with the whole trend up, until you get confirmation, especially on that larger time frame, I don't think it's wise to open one up. Because the trend can continue to be irrational. It can continue to push beyond what you think it should. The waves continue to subdivide as it goes up. Because you have more and more of the retail kind of FOMOing in the higher it gets. It takes longer for supply to kind of take out all that new demand that's coming in to get that reversal. So yeah. Let me see here. Hey, what's going on, Gian? Good to see you. Let me see here. Tellurrider says, I'm starting to sell bits of spot Bitcoin here because parabola advance and in good profit and stairs up, edge of cliff down. Yeah, exactly. That's right, Data. Nothing wrong with taking profits. Okay, guys, guess what? Nobody ever went broke taking profits. All right? You can't go broke taking profits. Don't forget that, all right? Remember, when you're in profit, if you don't at some point take profit, when you're in it, when are you going to take it? So what I'm saying is, once price is in profit, at what point do you take profit? If you don't take it at some point, when are you ever going to take it? You're not. And again, that becomes the whole price. You continue to emotionally think that price is going to go up and up and up and keep going higher, and you don't want to miss out on all that little bit left. and then price turns and goes the other way, and then you're so beside yourself because it's going the other way and you didn't lock it in already, that the further it goes down, the harder it is to lock in what you have left. I'm telling you guys, if this is not getting you going, oh man, he's talking about me, they will. This is every trader's kind of dilemma that they go through at first, until they start getting used to taking profits. Yeah. Let me see here. So, I mean, that's kind of where we're going with that. DXY, this is the daily here. You can see we had a drop down to my blue line here. And now we're kind of getting a bounce off that at the moment. This is the daily. We had this large bullish divergence from the 30th of July until the 17th of December. And then more recently now from the 17th of December, currently right now, we do have a slightly lower low there with price. And we do have higher lows here with RSI. Stoke RSI is still pretty high for me, though. I don't know. It could do something like this here, where it did back here in August through September, and price kind of went up there. You could see something maybe like that. Right now, my count kind of says 1, and then an expanding flat here for 2, and then we've got basically a 1, 2, 3, 4, 5 gives you 3 and 4. Potentially working on 5 right now. But that's what we're seeing. I mean, if this is a 4 up here, then the 61.8 extension of wave 3 is down here to about 88.195. Now, that doesn't mean price has to go there. Price could print a short wave 5, but that's generally the target we would look at, if this count is correct here. If price moves out of this descending channel resistance here impulsively, that might be the first clue that the bottom's in. This is your wave 2 channel here. Further advance above what is wave 4 here at 91.018 would add confidence to that. But again, you need that at least to start feeling like maybe there might be a bottom there. But I really expect that once there's a bottom, we're going to see price kind of move rapidly to the upside. Again, sentiment is still significantly offsides. Again, the dollar is still the second most crowded trade right now, short the dollar. And as I've talked about, crowded trades like that are usually punished. They're rarely ever rewarded. I still see a lot of people pontificating on the dollar, not really having any clue how QE works and whatnot's going on there. I did post here Santiago Capital. It's a good place to keep your check. If you are bearish the dollar, it's a good place to keep your check on your what you think's going on with that. He posted this great charts here. Here we go. Everybody talks about the Fed's balance sheet rising, right? And that's their reason for why inflation's about to hit hard and hyperinflation's going to hit, all this other stupid stuff. Plan B posted the dumbest chart recently, and I don't mean to sound real rude about it, but it really just was so dumb. Comparing the current U.S. dollar to the Weimar Republic of Germany, their hyperinflation after World War I. Complete lack of understanding historically what was happening there and what was going on at the time. God, it's the dumbest chart. And I say this because, man, so many people are retweeting it and liking it, and it just shows that nobody really understands what's going on with money, guys, or history even. But anyway, Santiago Capital has this here. If we look at total assets of major central banks in the world as a percent of local currency nominal GDP, the Fed is way down here below the PBOC, the ECB, and the Bank of Japan. They're at the bottom, guys. You can sit here and go, oh, they're raising it so much, so much, so much. But the reality is, in terms of a percent of local currency nominal GDP, they are below the other three, significantly below the Bank of Japan. Which, of course, the Bank of Japan's been doing this whole quantitative easing type thing since the 90s. Lost decade, remember that, right? If we look at it as total assets, then even here, the Fed is below the ECB. Now, why is this important? The ECB is the Eurozone over there, guys. Okay? It makes up most of the weighted value of the basket that the dollar is compared against to get the DXY. Remember, the dollar's value is not based just on these things that are going on in the U.S. Its value is based on how it is viewed in relation to other currencies. So if other central banks are near or above in terms of total assets, or especially here in terms of a percent of local currency nominal GDPs being way above it here, this makes the dollar more valuable against them in general. Just in general. So why is it important with the ECB? Because again, it makes up basically 54, 57, something like that percent of that weighted basket that gives the DXY its value there. So if the ECB, if the euro is less favorable than the dollar, that's going to have a significant bullish impact on the DXY. All right? So if we look at this, let me see here. Let me find all my charts here. And we take a look at where the euro is right now. Let me kind of pull up that chart for you guys. Let me see here. All right. Yeah, we can look at this in a minute here. It's the stock market. But if we look at the euro against the USD, right now we've kind of got this on a final leg up. And so if this count is correct here, then that means that the DXY is most likely near its low. And again, if the DXY goes up in value, again, guys, I don't think there's any way you can argue that if the DXY goes up in value, any other asset is going to rise with it. That isn't what happens. Again, if the DXY goes up in value, that means the dollar is worth more. That means it takes less dollars to buy things, which means the value of things, of assets, of these instruments that we're looking at, they all go down. Necessarily. Because it takes less dollars to buy them. So, again, but the Euro USD is just one of multiple currencies that make up that, but it makes it up significantly. The next biggest one is the USD yen, which is at about 11.5% of the weighted basket. So between the yen and the euro, you're looking at almost 70% of the weighted basket value that the dollar is compared to for the DXY value. So with both of those, that's significant. That's significant. So if you get both of those, if you get the Euro USD dropping and the USD yen rising, that gives significant demand pressure to the DXY. And if it's going up, again, there should be a race to grab dollars, especially by foreign countries who need those US dollars to pay that US debt. The longer they wait to get those dollars, the more expensive their debt becomes because they have to pay their debt with more expensive dollars. It's going to cost them more to get those dollars. And so this creates, again, something like what you saw back here in March. You get this liquidity issue as everybody's rushing to grab dollars. I should probably say that same thing here, except it should continue up then as well. So that's kind of where we're looking at the moment, guys. But it hasn't happened yet. I don't think we're bottomed out yet. I think we still got a bit further to go. But the idea that Bitcoin or anything else can continue up in the face of a significantly rising dollar, I think is just wishful thinking. It doesn't happen that way for the reasons I've already explained there. Let me catch up to you guys. Charter EFE says, I always see people saying I'm never selling, and it's the signal it's going down. Many times, sure. Crypto Girl says, my issue is taxes, hoping Bitcoin price holds up till January. Hey, man, January's just 2 days away, right? A day and a half away now? Something like that. We're almost there. Can you all believe that? It's been crazy. Let me see here. If you're going to try and pay your taxes with your Bitcoin profits, that may be difficult. even if we're just talking about a pullback, a larger pullback at the beginning of the year, taxes are due in April here in the U.S. So, the big issue we had back in 2017 was, we had the big move up and then we had the big move down. And so people had all these taxable gains, especially from Q4 of 2017. And then they were trying to pay that with what they had, which was the Bitcoin gains they had. And by April, they were so much less. It was so much less. It was worth significantly less than what it was at the height there in December of 2017. So that became a real big issue. Try and pay your taxes with, so much of the profit that you made had to now be spent to pay those taxes because you had to pay back those taxes with a less valuable Bitcoin. You're paying back with cheaper Bitcoin. So it was worth more when you made it, basically. So yeah. Let's see here. Hey, Leighton, what's going on, man? He says, do you not think that a large proportion of excess money printed will make its way into the economy mid next year? How? How would it do that? Here in the U.S., that money doesn't directly go to people. That money sits in the Fed Reserve as a balance sheet thing for banks. It's reserves for banks. It doesn't actually go. They don't dip into it. They use it for the paperwork so they can say, listen, we can loan out this money because we have required reserves. That's what the QE basically did. That and then of course the asset inflation. But as far as money going out to people and in circulation, that isn't what happens. The way you get new money is through credit expansion. So people taking out new loans, which is what the Fed is trying to get the banks to do. The Fed is trying to get the banks to loan out that money. That's why they put all that money in the reserves. So the banks can say, oh yeah, well, we've got the money in the reserves here so we can loan out this money. The problem is the banks have been tightening up their requirements this year instead of loosening them, which is what that whole QE was meant to get them to do, to loosen their standards so people with less worthy credit could then take out loans, get approved for loans. But again, banks tightened up their standards and people have been paying off their debt and they haven't been going to get new credit. So we're not getting the credit expansion that's needed. That's the way that new dollars are made. It's not the printing at the Fed. It's the new loans that are created that create those dollars out of thin air, basically. That's where your money inflation comes from, your actual inflation. Otherwise, again, the money that goes into the Federal Reserve Bank, it sits there. It can't be used for anything. It can't be touched. It has to sit there. And that was most of the QE. That was 60 or 70% of the QE. And of course, like I said, the other bit went in through, the bond program there that basically, and whatnot, that basically, created asset inflation or a rise in asset prices. Not asset inflation, just a rise in asset prices. But yeah, so yeah, just because the money's been printed doesn't mean it's going to go out. They can't just pull it out and give it out into the populace. It's not going to. It doesn't make its way out there. The new money that comes that makes its way into the public is the money creation through credit expansion. So yeah. Let me see here. As soon as the economies open up, the banks will release. People will want to spend, but supply chains are lagging, so prices go up, hence inflation. People will want to spend, but supply chains are lagging, so prices go up. I don't think it's as simple as that. Again, if you look at the St. Louis Fed site, Fred, we've looked at things here recently. What did I post here recently on Fred? We've seen that corporate credit is going down significantly here. I'm sorry. Let me see if I can find it here real quick. Let me see. Right here. This is for the week ended December 2nd. Commercial and industrial loans at all commercial banks declined by $4.5 billion. That's a significant drop. This is credit contraction. Again, we are in debt-based economy, so we need credit expansion just to keep things healthy. If there's a slowdown in credit expansion, or heaven forbid, a contraction like we're seeing here, that's detrimental to the debt-based economy. That's why central banks are so scared of deflation. It hurts the economy significantly. So, we've got that. I've already went through, the record highs that we're seeing with corporate bankruptcies. We've talked about, with all this COVID stuff and going on and whatever. And, oh, excuse me. Sorry about that. With all this stuff still going on and many people still out of work. Remember, the jobs being lost are those white-collar jobs now. The jobs that actually are the people who could expand credit and take out new credit and splurge and spend money freely out there. The few jobs that are coming in, the very little job growth we've had are at those what do they call it? High school level jobs. The jobs that don't require even a high school diploma. Again, guys, if people are taking those jobs, they're just fighting to get by every day. They don't have money to put out to spend into the economy to get that whole money thing going. It's very tight for them. Again, right now, the companies that have survived this year so far, many of them are hanging on by a thread right now. It takes just one little thing to happen to force them into bankruptcy. And like I said, we're already at a record year of business foreclosure, business bankruptcies. I'm sorry. Commercial real estate, we know that's taken a deep plunge. Personal real estate looks like it's probably about, again, I said this the other day, probably about to hit the same wall. You get foreclosures, you get bankruptcies. This depresses asset prices. And then you combine that with a stronger dollar. Again, you start looking at that debt deflation spiral potentially. Not saying it has to happen, but everything in the world right now is screaming that's what's going to happen. I think the people that believe that the Fed or the central bank can stop all this, I think those are people that just don't understand what's actually going on or how things actually work. Again, the Fed printing dollars isn't dollars actually going into the economy. They're sitting in the bank's reserve, in the Fed reserve for banks. So, are banks going to jump on? Not anytime soon. They have no reason to. With everything credit, those things I just talked about, the chart I just showed you there with corporate credit and all that kind of stuff going down. The individual savings rates pushing up. Individuals even paying down their debt as well. The banks are seeing credit contraction. There is no incentive for them to loan. And we say when the economy gets pumping again, well, when will the economy be pumping again? It's not like, the minute it starts to potentially look a little better, they're going to start loaning. No, the banks are going to be laggards. They're going to want to make sure that the economy is really getting moving before they start loosening those standards again. So how does that happen, right? Let's see here. Let me kind of catch up with you guys here. Yeah, Leighton, that's what you mean, that the banks will loosen policy when the economy opens up. Yeah, but again, it won't be at first. It'll be lagging. A lot of banks got burned in 2008. Do you guys remember how many banks went under in 2008? Everybody says, the bank bailout. Well, it was the big bank bailout. But lots of local banks and state banks and whatnot went out of business in 2008, 2009. These banks that are around today that survived that, they aren't in a hurry to get themselves in that position again. Wounds are still fresh there. Let me see here. And I don't think people are necessarily going to spend money just because they have it. People are scared. People are scared the economy is going to continue to go to crud. Especially if you're in a country where your government keeps locking you down. People are generally going to put money aside. They're going to save it, which is what we're seeing. We're not seeing spending. It's not because people don't have anything to spend on. I buy Amazon all the time myself. But, again, people are going to make sure that they have some cushion there. They're not going to spend like they were prior. And again, this is all noted by the general contraction in credit that we've seen across all the different metrics. Any thoughts on how long the government will keep moratoriums on mortgage forbearance going? When a vaccine is in circulation for compromised populations, can they continue to justify the policy? Exactly. Now with Biden in there, and he's getting a lot of push from the much more progressive Democrats, like Sanders and AOC and them. I think he might try to keep that forbearance going on, in spite of what you just mentioned there, justification of the policy. But even that's going to have a limit. I mean, even that, there's only going to be so much they can do with that. And so, again, so many people right now are hurting, and the mortgage forbearance has been their lifeline to keep them in their place, without losing their home. But when that goes out, how are they going to do that? All of a sudden they have to pay. They don't just get to not ignore that rent that they haven't paid, or that mortgage they haven't paid for 6 months or whatever it's been, 9 months. They have to, if you look at most of these loan documents, they have to either pay it back right then, or they have to work out some kind of deal if their bank, depending on how lenient their bank is. Different banks, I've seen different of these forbearance things from the banks. And some banks are more lenient. Some banks say, okay, well, we can tack it on to the end of your loan, and just start picking, just kind of pick it up from where you're at. Others say, well, it's all due at the end of that at the end of that forbearance. It's all due at that point, which you haven't paid. Yeah, I know, it's crazy, right? Others I've seen say that they want the principal, but that the interest they will or they want the interest, because that's the higher part of it. Usually, especially if you're a newer mortgage, but the principal they'll tack on to the end of the mortgage. So it depends on what bank you're going through. I've seen a lot of different ones like that, but in all of them, it's not like a simple, everything's just back to normal right away. So, if that forbearance policy comes down, the forbearance moratorium comes down, people are going to be kind of stuck all of a sudden. And I think it's going to lead to a lot of bankruptcies or a lot of foreclosures. And again, foreclosures lead to depressed prices. And so depressed prices aren't good. Well, I mean, they're good for people who can buy them, but for a debt-based economy, depressed prices are negative. Prices must continue to rise. You need overconsumption, overproduction. That's the only way a debt-based economy continues to grow. And if it's not growing, it's necessarily contracting. Even if it's, just growing at a slower rate, it starts putting a lot of downward pressure on that economy. Makes it much more susceptible to further fall. It's a very delicate thing, guys, when you're working with a debt-based economy and credit. You absolutely have to have credit expansion. Anything else really just hurts you. And it's nothing that you can get out of overnight. It's nothing that just, one day you're that way and the next day you're better. It takes a while to get back from where you've been. So, yeah. Layton says spending on services is down $400 billion this year in the U.S. alone. When that opens up and there's a clamor for them, but not enough out there to service them, then prices will increase. Simple. It's not that simple, though. It honestly isn't. I know, that we want to think it is, but it's not. There's a lot more to it than that. And again, we're just because people have the ability to spend doesn't mean they will, especially if they're still concerned about the economy, about what's going on, about COVID, about their job, which people are losing still. Especially, again, those higher paying jobs, which have the excess cash. And those higher paying jobs, again, if people are losing their white collar jobs and they're not able to get one to compensate for it, we're talking about higher level foreclosures and bankruptcies because they have a lot more debt. So, yeah. Trader EFE says, I need a loan to pay off my loan. Let me see here. Oh, we found something Hank agrees with me on. Talking about the USD created through credit expansion. Yeah. And that's the same way it is with most debt-based economies, or if you've got a debt-based economy, because that's what you're doing. Credit expansion is what keeps your debt-based economy going. So your currency is created by that creation of credit. Yeah. Let's see here. What do I think of big banks being put to the test and making it out strong? JP Morgan, for example. I think it's like anything else. The bigger you are, the more likely you are to be successful, to make it out of it. The smaller you are, the more likely you are to not. So that's the same way with banks. JP Morgan has paid. I mean, JP Morgan and most big banks have paid so much in fines and whatever for things like attempted market manipulation and stuff like that. But I think 2020 has been an especially hard year on JPM for that. But I think they're still all right, though. Let me see here. LXT says, while you guys are still concerned with the virus, you don't realize that the economy is dead. Let me kind of catch up here. Bahamaj is in there too, I guess, somewhere, huh? Saw that name pop up. Let's see here. Okay, we got conversations there about virus and vaccines and stuff. Let's see here. Will we get another... What's up, Mr. Fat Face? He says, will we get another March-type correction soon? I mean, my thought is that March was a warning. March was the warning shot. It was the, hey, you need to pay attention. Instead, the market's all exuberant. They're saying, oh my gosh, it's the next big bull market running. Let me go ahead and pull up real quick here a stock market chart here and talk about this real quick. So let's pull this out the daily here. There we go. We'll take everything off of here so we can see a little bit clearer. All right. So I think this is kind of the, hey, listen, pay attention here. Now, what happened was, since this point, since down here, the market has been very bullish all the way up through here. And they're like, oh, this is the start of a new bull market. Well, first of all, this would be the shortest correction ever after a 10-year bull market kind of idea. That's the shortest correction ever. But more importantly is the sentiment that's going on here. The things that most people are having trouble wrapping their heads around because they haven't been through multiple recessions and things, is that bull markets are not born of euphoric sentiment like we have here. Bull markets are born of quietness, of despair, of this belief that it's never going to go up, that it's dead forever, all these things, that it's still got further to go. That's how bull markets are born. Not with this excitement about how we're going up higher and higher and higher and higher right from the beginning. This euphoric, what's going on here, is usually a telltale sign of the end of a bull market. So if we look at it that way, then this becomes a warning shot here, but rarely is anybody paying attention, which means the decline coming next is going to be worse than this. And it's going to continue down. It'll be the big one. I mean, you see pretty clearly on the daily here, we've got this large bearish divergence right here as we're getting toward the R1 pivot on the daily. Weekly, we've been in a decline on the weekly, a bearish decline since January of 2018. Monthly, again, big bearish divergence in the monthly. Now, all this doesn't mean it has to turn around right now, but it does mean if you're not paying attention, I don't know why you're in the market. You're asking to lose money because you just think, oh, it's just going to go up. You think, oh, this is the start of a new bull market. That's all there is to it. It can't possibly be the end of the other one. It can't possibly be the end of some 100-year cycle, some 90-year cycle, could it? And that's where most people are missing. But, we look at those things like credit contraction. We look at the things that I continue to talk about. The record level of business bankruptcies. The fact that people are saving and not borrowing. All these things, the where the jobs are being lost and where they're being gained. We look at all this and none of that is positive. Absolutely none of that is positive. It's all negative. Yet everybody believes everything's got to continue going up. Why? Because the Fed prints money. They think that money that the Fed prints gets right out into circulation. It's out there, and that means inflation. Weimar Republic, we're dead. Bitcoin's soaring. Bitcoin's going to be the savior of the world, and that's all there is to it. It's not all there is to it, and that's not the way it is. But people are going to think that way. As long as price continues to push up right now, people are going to continue to think that way. And then they're going to continue to buy the dips until they run out of money and price continues going further and bankrupting them. That's the most likely scenario. So, is there going to be a drop like this? I think so. And it's going to be worse. It's going to go further and it's going to continue on. Because this drop right here is precipitated with this right here. And this would be the bottom, which means you have a reversal. So this was just a corrective move coming down. Again, part of this potential, part of this flat here. Expanded flat. Next one would be a reversal heads up. So you got a lot further to go potentially. Let me see here. Errol, man, what's going on, man? He said, tomorrow is my last day at the current work, oil and gas sector. Man, I hope that was your choice, man. If not, I hope you've got something else lined up there, man. I know it's tough. I've got a lot of friends in oil and gas. Who are sucking wind all this year because of everything. They did great the last few years, and then this year, nobody's prepared for that. And it's a terrible, it's a tough thing. A lot of people that I know, unfortunately, in that area are oil rig hands. They're not high-end management or anything like that. Though I do know some people have been doing it for a long time they have their own companies. They provide services to the oil and gas industry. But even them, they're taking hits. They were making $300,000, $400,000, $500,000, $1 million last year, the year prior. And this year, they're lucky if they're making a third of that. They're lucky if they're making a third of that. And you go, oh, wow, man, they were making $1 million, and so now they're making $300,000. They're still making a lot because they're making so much more than me. Yeah, but for them, with their expenses and their lifestyle and everything, that's a huge hit. That's 70% of their revenue is gone. That's hard. That's hard. You already have something? Good to know, man. Good to know, man. Really glad to hear that. Aeromat says, I think we are yet to feel what is really going to be, where did you go there? Really going to be consequences of 2020. Yeah, I think that's a strong possibility. Anything can happen, guys. I can't tell you that what I think is going to happen is definitely going to happen, but I think if you're continuing to play it off, because you think that the Fed's balance sheet means something right now in terms of inflation and money in the out there in the world and whatever. I think you're really just really setting yourself up to be surprised in the worst way possible. I try to do my best to educate you guys here on this stuff, but you can lead a horse to water, but you can't make him drink, right? We got a little bit of a dip below this support line here. So that's kind of interesting. Let's see here. We're still getting some push up here with Bitcoin, so we'll have to keep an eye on that. Again, to see if it makes this move up and heads up toward those 29, 30, 31,000 kind of targets. Right now, how far are we up here? Right now, we're coming up there to around 90% on that. I don't know, so maybe this becomes just an ABC here. Again, if we look at this, it looks like a 1, 2, 3, 4, 5. So we'll see what happens with this. Again, looking for potential that move above. But as long as it stays here and it comes down below this swing low, that opens up those much lower targets that I talked about earlier. I say much lower targets, some of them. But if it gets above here, again, we're looking at potentially 29, 30, 31 heading up there. FMTT, what's going on, man? It says, I don't. You think that for Bitcoin, if it's about a big flat correction, our B wave currently in progress, soon to its end, is pretty long. I mean, it has reached around 1.618 times the A wave. Talk about the bigger picture just to make it clear. Yeah. No. That's something we've already talked about many times before. Yeah. That's why I look at that, this right here. If we look at this as potentially an A, a B, and a C, then right now, let's see here. We're not quite to the 1618 yet. So, still kind of where we look at it, it's still definitely viable. The idea is that once it gets to around 33,000, it's less likely. But at that 33,000 level, there's still a greater possibility that we may have a running flat. And so a running flat just basically would be something like this. You get your A down here, A, B, C for, your B. And then you get C down here to around, 9,000 or something like that. And then you go up with your next one. So you have your A, your B, your C, and then it would go up. If you get up there around 33,000. It would make it more likely to be a running flat than an expanded flat. But it could still be an expanded flat. That's the thing. There is no, at some point you go, okay, it's definitely not an expanded flat at this point. Because flats are guidelines. They're not rules with them. So, yeah, it is getting long in the tooth up there. Definitely. Sure. Which is why we continue to look at the possibility of more upside and where we'd be looking for that and how we'd be looking at it. Sure. Could the DXY just keep going down until the 50? I mean, I can't say that it couldn't, but is it really likely that it does? Probably not. For the DXY here, looking at the monthly, we've already got hidden bullish divergence right now, and the monthly is about to hit oversold. So as long as price reverses prior to this swing low here, 88.253, you've got monthly hidden bullish divergence. You've got Stochk RSI down and oversold here. If this thing was to hit 50, I mean, this would have to, I think this would go really, really, really low, on the monthly RSI for it to do that. 50 is way down here. And we're already way down here. So again, I can't say it wouldn't or it couldn't, but right now the odds are much more likely that it's not. Now, if it continues down further, down into here and whatever, then maybe it becomes more likely. But for now, I think the odds of that are much, much less than they are for, to not do it there. Or much, much less than, to actually do it. Let me see here. Let's see here. Telluride says all the commercial real estate is for sale, for lease. Record homeless. This is the fine meme. Bitcoin seems psychologically 30,000 should be a magnet by now. Oh yeah. I'm definitely. That was the same thing we talked about back around 23, 24,000. How it was likely potentially heading up there to 30,000 at least, because that becomes the next psychological tens number on it. Let's see here. FMTT, you're very welcome. Sure. Clarkman thinks that if you go below 88, they're probably going to pierce through and fall like a mofo. Below 88. Let me see here. Let's go back out here to the monthly. I don't know that it has to drop significantly. I mean, if you're zooming out here and looking at this, this is a 1, 2, 3, 4, 5. I mean, on the monthly, it looks pretty clear. Potentially as a 1, 2, 3, 4, 5, right? Let's see here. If this is 2, and that's 3, and that's 4. Again, you've got that basically 89 level as that 61.8. That puts you right here at this previous support level where these candle spreads, closed and opened at, and where you had these wicks down here. Let's see here. As well as about halfway on this. So if we're looking at this supply structure right here, if we just continue to pull it all the way across. Oh, doggone it. Let me get this back out here real quick. Months, there we go. Again, that 61.8 right there around the EQ of this supply structure, this monthly supply structure from April of 09. I mean, right now this remains the big level right here, this 88 kind of level. So yeah, if you break down through it, I don't know that it necessarily has to drop like that. I do think it could get down here toward these low 80s though, where you've got this next level kind of area of support here. But, it actually has to do that first. And right now, with where it's at and where the monthly RSI is, where the weekly is here. Was it the monthly? Nope, it's the weekly there. Okay. Still got some bullish divergence on the weekly here right now as well. I mean, so, if you look at that, it seems more likely right now that it'll bounce from this area and head back up, or reverse off and head back up, than it does that it'll drop through and then just continue dropping off. I'm not saying it can't, but I'm saying right now the odds look more significant that you're going to get a reversal out of here than you will get a drop through. So we'll just have to see what happens when it does happen, though, for sure. But I do find it quite compelling, this supply structure from back there in 09 being where it is now. And the projections and everything on all that. Let's see here. Hank says it is in WXY. I'm not even saying it is a 1, 2, 3, 4, 5 here. I'm saying in my count right now that's what it looks like. I would never say something definitely is or isn't when it comes to charts, because we don't know. I think when you start saying something definitely is or definitely isn't, I think, again, you set yourself up for a lot of heartache, a lot of issues in the grand scheme of things with that. Let me see here. But yeah, so, we'll kind of see what goes on here, guys. Again, the idea is you play the trend until you don't, but you absolutely have to pay attention to the dollar. Don't blindly sit there and think it's just going to go down forever or it's going to go down some huge number. It may, but with all the other indicators going on there, if you're looking at put-call ratios among small and large speculators, if you're looking at sentiment, if you're looking at crowded trades, if you're looking at, economy metrics like credit contractions going on, stuff like that. I mean, if you're looking at all this, guys, there's a heck of a story there as far as a reversal. Remember, it's when people at their most in one way or the other that the market usually reverses. So in terms of the stock market and Bitcoin, everybody's very euphoric. They think this is all some new bull run. Maybe. But again, usually that kind of euphoria at this point in a run is that doesn't happen. Again, that kind of euphoria usually comes at the top. The same thing with the dollar. Again, record levels of bearish sentiment. But there are a few other charts, and I'll see if I can post them today on Twitter, guys. You guys can check them out. That will look at the dollar in different ways, and you'll start to see a story developing there. So definitely be paying attention for that, guys. You're follow me at TX West Capital. Again, I don't post a whole lot, but when I do post something, it's usually something of significance. So, definitely watch it on there. When do you think we'll have the ultimate alt season? Alex T says no more alt season. I don't know. If you're just talking about this time when you can just put money in anything and it all goes up, who knows? Who knows? We've got to see what's going on. If this bigger idea with the Bitcoin is going on here, where you're going to have this strong reversal, heading way down, you're not going to get you're not going to get that kind of alt season anytime soon. What you're talking about, I think when everybody talks about alt season now, I think what they're talking about is basically Q4 of 2017 or the last half of Q4 2017. But that's a rare occurrence to have that kind of alt season. So that's just when money is just being stupid and just kind of going into anything, anytime, all the time. And so that usually happens at the top of markets. Again, what I was already talking about. Hey there, Ronnie. Good to see you checking in. Edward, hey there. Good to see you. Let me see here. But yeah, so that's kind of what we're looking at, guys. By the way, you guys should definitely be following me on Twitter, joining us at Discord. We're going to look at starting to do members-only giveaways for our Discord members, our TWC members, at least once, maybe twice a month, starting sometime next year, here in the first quarter. And we'll be giving away different things, things I think that, nothing stupid, guys, things that I think will really help you with your growing as a trader and whatnot. Everything from books and DVDs or video or whatever about concepts and things to like Elliott Wave and K waves and Wyckoff and stuff like that. But also discounts on your membership, stuff like that as well. But prior to that, what I have, and sometime next month we're going to do this. I've got this 10 DVD set here, unopened, from Elliott Wave International. And they usually charge about $1,500 or $2,000 or something for it. But I've got it here to give away. I've also got, I've got multiple copies of Socioeconomic Studies of Society and Culture. I've got multiple copies, hard copies here, of the Elliott Wave Principle. I've got multiple copies of Socioeconomic Causality in Politics. I've got multiple copies, if you guys haven't bought it yet, of the Socioeconomic Theory of Finance as well. So I'm going to be giving away all these starting next month. We're going to do some giveaways for these things for you guys. And hopefully, help you become better traders, and not just better traders, but just understanding life better in general. What's going on with your politics? What's going on with your with people? What's going on around you? And hopefully, understanding that maybe to have a more successful life. So I'll be giving those things away. I think it's going to be a pretty cool thing to do. Tier 4 in 2021. We'll probably have a Tier 5 in January, Cryptomogly says. I don't know what else I could possibly add for all that. One thing I am looking at doing, guys, is adding the sentiment indicator readings from, right here, from tradefutures.com. This is where I get things like when I tell you that the dollar is at 92% bearish. It comes from his specific stuff that he uses where he calculates it every day with all the different markets and whatever. Normally these things run you guys, let me see here. If you look like at a year's subscription on that, it's about $2,000. And so I'm thinking about adding that in to give you all the daily, what do you call it? The daily sentiment for our Tier 3 members there as it goes through there. Not just with the dollar, but with, the other markets as well. So it looks like some will probably be adding in at some point here in Q1 of 2021. And of course, with everything else we've got going there. And of course, I've got something special I'm going to be launching next month as well, guys. Can't wait to tell you all about it. But if you are interested in understanding the bigger picture, bigger macroeconomic concepts and ideas, global financial policy, global finance in general, Elliott Wave, socioeconomic theory, Wyckoff theory, trader psychology. You'll be really interested in what I'll be releasing in January. So definitely be checking in with that, guys. All right. Let me see here. But yeah. So we'll see how everything goes here, guys. Talking about discount, I'm struggling to put it in mine as a member. Clark, man, go ahead and DM me there in Discord. I'll help you out, man. We'll see what's going on there with that, okay? Yeah, definitely let me know if you're a member and you're having trouble, using that discount. Let me know, and we'll figure out what's going on with that. We'll get you all set up, all right? If you're new, of course, jump on that discount. It's a limited time. It's welcome 2021, welcome 2021. That's what you'll add there on your checkout page in the coupon area. By the way, when you go to that checkout page, you'll find, as you know, there at the top of the page, there'll be a little square box, and it'll have that coupon there. You can just click on that, and it'll put the coupon in there automatically for you. So it just shows you the coupon's there, and if you want to use it, you can click on it and it'll put it on there, and you'll get your 25% discount. Again, that's off anything we have, guys. So whether you're looking at just a month of whatever tier, or if you're looking at 6 months, or if you're looking at a year. By the way, remember, the more months that you purchase up front, you're already getting discounts compared to your monthly rate. So this 25% just becomes 25% off that already discounted price. So it could be quite significant if you're interested in jumping in there on it. Okay, guys? All right. Hank says, have a great new year, and may 2021 give you all you want except for a more expensive USD. I don't think that's what the other countries want. I think they definitely want a more expensive USD for them. So, hey, listen, guys, I really appreciate you all checking in as always. Lewis Winthrop III, great to have you in checking in. I'll be back, guys, on Monday, whatever that is. What is that, like the 3rd of January? I got to go check here real quick now. Maybe, if my calendar pops up. There we go. The 4th. I'll be back on Monday the 4th. At 11 a.m. Central Standard Time. So hopefully you guys can join in there. We'll see what Bitcoin's done. We'll see what it's broken, or if it's been broken during the new year. And we'll come back with that, all right? Other than that, hey, man, I'd love for you guys to join us. So do so. If not, we'll see you then. Otherwise, follow me on TX West Capital, guys. If you're watching this on YouTube, subscribe to the channel. If you're watching on Twitch, again, subscribe there, follow. And that way, you all know when these things are going on, all right? You guys have a fantastic new year. Be safe. I wish you all joy, happiness, and prosperity in 2021, all right? Remember, the only thing you control in the market is how much you lose. So keep working on that risk management there. Bobby Niles, Happy New Year to you too, my friend. Take care, everybody.